IPO that is coming in, and that is IRM Energy, opening tomorrow, 18th of October. What does the company do? What is the fund that we are raising? If you could just give us an understanding for that.
Well, it's a city gas distribution company. In fact, the first city gas distribution company to come out with an IPO post 2016. 2016 was when Mahanagar Gas had listed. So the price band for this IPO is set at around 485 to 505, and they're looking to raise close to 545 crore rupees. And they will be using most of this fund for the capital expenditure, means they plan to expand in their current geographical areas. For that, they will be using this fund, and around 135 odd crore rupees they'll use for debt repayment. Now, if you see, the company has current debt of around 321 crore rupees, and the cost of debt is close to around 8.5%, but we'll get this confirmed from the management, and they'll be repaying around 135 crore of this. Now, it operates in 4 geographical areas, and these are present in 4 different states: Gujarat, Punjab, one is a union territory, and then it's Tamil Nadu. Currently, they have around 184 industrial customers, 269 commercial customers, around 52,000 domestic customers, and around 66 CNG filling stations that they have in these 4 geographical areas. Now, over FY20 to FY23, if you see the company's financials, they have the revenue has grown at a stellar rate. But in FY23 compared to FY22, there was a big dip that we had seen in the margins and also in the net profit. From 128 crore rupees, what the company reported in FY22, the profits have come down to around 63 odd crore rupees. Now, when we compare it with its peers like Gujarat Gas, IGL, and Mahanagar Gas, the company is still very small in size, because if you see the total volumes in mmscmd terms, that is million standard cubic meter per day, it has a sales volume of just 0.5, while its peers have a volume in the range of around 3.4 to 9.2. Also on the margin front, it's better than what Gujarat Gas does, but the margins on EBITDA front, if you see the per unit margins, are still lower than what Mahanagar Gas does at around 10.5 rupees per SCM. So we'll have to see how that pans out. Now, if you see the 12-month forward valuations on the price to earnings basis, it's around 12 to 13 times, while its peers like Mahanagar Gas and IGL are trading close to 12 times, while Gujarat Gas has a high valuation of around 20 odd times.
Okay, that's how the setup is looking like for IRM Energy. They're opening tomorrow. But today we are joined by Karan, Kaushal, CEO at IRM Energy, as well as Harshal, Anjaria, CFO at IRM Energy, joining in with us this afternoon to talk more about the company, give us an understanding before the IPO. Very good afternoon to you, gentlemen. This is Vinny this side, and with me, Somit is also there. So, obviously, let's just start by talking about the company, right? IRM Energy, city gas distribution company, and you have 4 geographical areas, like Somit was mentioning, which are under your belt. Of these, how many are operational, and how do you see the contribution from each of these areas actually rising going forward?
Yeah, thank you, Nikki. Good afternoon. Yeah. Can you hear us?
Yes, I can hear you. I can hear you.
So this company was incorporated in 2015, and we got the initial 2 geographical areas in 2016. We started off with Banaskantha and Fatehgarh Sahib, and we added one more geographical area in the Saurashtra region of Gujarat, which is Diu and Gir Somnath. And lastly, last year we have just added one more geographical area in the state of Tamil Nadu, which is Namakkal and Trichy. On a volume share front, Banaskantha contributes to around 40%, and 55% of volumes come from Fatehgarh Sahib. And Diu and Gir Somnath is also contributing, it is from around 5%. The volume contribution from Namakkal Trichy has just started. We have just started operating 5 CNG stations. The majority of the volume contribution from this new area will start coming in by next year. And in terms of the potential it has more potential than our existing 3 GAs. So that is how the volume mix will look in the next 4 years. At the end of FY27, 30% of the volume will be coming in from the area we have in southern India, Namakkal and Trichy, and around 30-35% will be coming from Banaskantha, and around 40% will be coming from the Fatehgarh Sahib GA.
Okay. Harshal, my next question would be to you. Now, if you see the last fundraise that was done in IRM Energy, it was done at a value of around 550 rupees per share. And the IPO at the upper end is priced at around 505. So why is this lower pricing?
So while we did the last round at 550, but this was done to a Japanese city gas distribution entity named Shizuoka Gas. their average cost of acquisition, which was done in September and December, is around 463 rupees approximately. So while it is below their last price, but it is still above their average holding. And this is how we have priced our IPO at attractive level.
Okay. On financials, if we see in FY23, we have seen a sharp drop in profitability. So what led to this? Were you not able to pass on the higher raw material cost to your clients?
So FY23 was an aberration year for the entire sector because of the Ukraine-Russia war. The gas prices were at very peak level, and this resulted into lower margins. As highlighted by Karan ji, in Fatehgarh Sahib, we are connecting more industries, and it was a strategical move from the management not to pass on the entire cost to the industries because we were in the process of transitioning, and we wanted to push our infrastructure and gain more customers and build on the volumes.
Right. I just also want to understand a bit more, Kaushal, is in terms of going forward, what will be your stance then? Will you be looking to chase volumes over margins, or what is it going to be now?
Yes, the first barometer is to retain the volumes. We want to increase our volume because we are still on a growth curve. We are yet to reach the maturity stage. So if the comparison which you showed, that yes, we are relatively smaller in size vis-a-vis our peer CGD entities. So the first barometer for the company is to increase our volume and reach a volume of 1 mmscm and then 1.5 mmscm by FY27. Although we will be doing this profitably, but the first option, if there is a trade-off, it will be always be to retain volumes and grow the volumes.
So how should investors look at this? Like, what would be the sustainable margin rate that the company could generate even with chasing volumes?
So this we are very very optimal in our expenditure in running our operations. So our cost of operations is vis-a-vis other CGD entities are on the lower side. Even with this mix of 50% CNG and 50% PNG, our EBITDA per SCM is above 9 in the Q1. And we are reasonably confident that we will be able to maintain this EBITDA per SCM in the next 2 to 3 years, if not bettering it. The internal target is to have a double-digit EBITDA per SCM, but we will not go below 9 rupees per SCM. This will be predominantly coming in because the CNG segment, which is always going to be around 50% of our sales mix, our OPEX over there is relatively lower vis-a-vis other CGD entities. So that will help us to maintain this high EBITDA per SCM in this current sales mix.
Also, I just want to know in terms of, by repaying the debt of 135 crores, how much will your profit increase by? And also, what is your cost of debt? Is it at around 8.5?
So our cost of debt is between 8.5 and 8.8. And we are going to prepay 135 crores of our outstanding borrowings. And we are looking at saving in interest costs of anywhere between 11 CR to 13 CR as we move forward.
So if we see on FY23 basis, that would mean around 18% of your profits. Like that would be by how much your profits would boost in FY25 at least?
Forward-looking statement will not be provided, but our profits are expected to increase by at least double digit in terms of percentage.
Okay. So last question from my side at least. The 12th round of city gas auction has begun, and is IRM Energy actively bidding for any areas, or will you first look to develop the existing areas before bidding for new areas?
We want to add some GS to our kitty, and we are looking at the details which has recently been published by the regulator. And we believe that these areas are in the northeastern part of the country and also the northern state of Kashmir. So we'll see the capex requirement and then accordingly bid for it. And additionally, we believe that there are opportunities on the block for inorganic growth, and we are looking at all these opportunities seriously.
Right, and just one more thing from my side also, I want to just know is that which regions will you be focusing on bidding, which areas are you focusing on for more bidding over there?
So, ma'am, when we started, we wanted to be in North India and western part of India. And then in the 11th round, when the bidding came up for the state of Tamil Nadu, which is very progressive and has a good potential of CNG demand and also the industries, then we targeted to bid for Tamil Nadu and we picked up this lucrative GA of Namakkal and Trichy. So as a strategy, we will always look to increase our footprint in the southern or western or northern part of India.
Right. Thank you so much, Kaushal, as well as Harshal, for joining in with us this afternoon, giving us an understanding, and good luck for your IPO as well, which is starting tomorrow for subscription.